Welcome. Let's take a look now at a risk event for the week starting Monday, the 16th of January. And for this, we're off to DailyFX and the foreign exchange analyst, Richard Snow. Rich, welcome. What have you got for us?
Hi, Jeremy. I'm looking at the short side of dollar yen, and that's predominantly for two reasons. We are continuing to see a depreciation in the dollar as markets revise lower their interest rate expectations, despite the fact that the Fed still remains motivated to hike rates above that 5% mark that they've mentioned previously. So we've got one side of the equation, the US dollar, the other side of the equation, of course, the yen. Now, the yen has benefited from this carry trade unwind as we've seen yield differentials close the gap in recent times. The December Bank of Japan meeting, you'll remember, they decided to increase the cap on their 10-year Japanese government bond yields. And we have, of course, been seeing the equivalent yield declining in the US. So I am set up for bearish scenarios on dollar yen. Now, looking at the chart, it does appear like this move has accelerated, particularly after Thursday's CPI print that confirmed that inflation is moving lower as we would like to see. So ideally, you would be looking for some sort of a retracement here into better entry levels for continued bearish continuation plays, I would say. Something to note, we are seeing that death cross, the crossing of the 50 SMA down beneath that 200 SMA. So pretty much confirming what we've known for a while in that this pair is certainly moving lower. So looking for better entry points on bearish continuation setups in the week to come.
Rich, thanks very much indeed. That's the risk event for the week starting Monday, the 16th of January.